Good morning, good morning, good morning. I got a good video for y'all today, okay? It's going to be a very informative video. It's going to be good for y'all. If y'all don't understand what I'm doing, I'm going to explain everything that I'm doing, how I'm doing it, what's my mindset behind it, and how it can work for you, okay? So as you can see, I did not place any trades today, all right? I was just watching the market. One very important thing that y'all have to learn, right, when you're trading in the market is to realize that if you don't take a trade, that's okay, right? It's not, imperative to have to be in a play, okay? You don't have to be in a play the whole time. You don't have to be in a play every single day. You can just watch the market and study, all right? So let's get started here, all right? So as you can see, we are currently on MNQ, okay? This is micros. All right, we are on the 15-minute time frame. The very first thing that I do, right, when I'm looking for a play, okay, is I start off on the weekly time frame. Michael, why do you start off on a weekly time frame? You have to realize, let me delete this, okay. And let me also delete this for y'all. You have to realize that there is always a bigger picture, okay? So I get my bias from here, okay? What does it look like it's going to do within the next week? Me personally, I think it's going to keep going down, okay? That's my bias. Again, I'm not a financial advisor, okay? I'm not here to advise you what to do or how to do it, okay? I'm just showing you what I do and how you can learn from it, okay? So start off on a weekly time frame, get your bias, okay? Then you go down a chart. Go to the daily. What is the daily? So before I move on, okay, the weekly, this represents, okay, each candlestick represents a week, okay? Same thing for the daily, okay? Each candlestick represents one day, a full 24 hours, okay? So you come in here, get your bias, okay? What is this next candle gonna do? Me personally, I still think we're extremely bearish, okay? Or actually, we might not be, guys. Check this out. I'm going to show you something. There is a fair value gap right here, okay? What is a fair value gap? A fair value gap is an imbalance in the market. Look at that, okay? We could continue down to hit this fair value gap and continue back up, or what could happen, okay, is we just take this fair value gap right here, since we're in it, and we continue our way up, okay? But I still think that we're bearish, okay? That's just me, because there's also a fair value gap right here, okay? There's another imbalance because these didn't connect yet, okay? So bam, you got your weekly bias, you got your daily bias, and I do the same thing all the way down until you get to the 15-minute, okay? Once you get to the 15-minute, okay, so right now I still think we're bearish, okay? You're gonna come to the 15-minute and see what's going on, all right? Now, again, the higher the time frame, the bigger the picture, okay? So what I would do personally, okay, is I'll go down to the 5-minute, okay? Now, the next thing I'm gonna do is I'm gonna look for my buy side and my sell side liquidity, okay? Keep in mind, you could do this on a 15-minute chart. It would actually be easier, so I'm gonna show you guys real quick, okay? So I trade the London kill zone from 02 a.m. Eastern time, New York City, to 0500 Eastern, okay? New York City, okay? So you're probably asking, Michael, why does any of that matter? I'm going to tell you. Check this out. So what I'll do is I'll go to where 0200 starts, okay? 0200 starts right here, guys, okay? And it ends at 0.5. That is called the London kill zone, okay? What I'll do is I'll mark the highest and the lowest point from 0.2 to 0.500. So I'm going to show you guys now, okay? There's your buy side liquidity, okay? Here's your sell side liquidity. Again, these are the lowest points, okay? From 0.200 to 0.500. These are the lowest points. The highest point is your buy side liquidity. The lowest point is your sell side liquidity, okay? So what do you do from there? Okay, so I'm going to continue. I'm just going to mark this real quick. Okay. So what's sitting above buy side liquidity? Guys, ICT explains all this, okay? Is buy stops, okay? What's sitting below sell side liquidity? Sell stops, okay? Now, you're probably wondering, Michael, what do I do next? Okay, I found my buy side liquidity. I found my sell side liquidity. What should I look for now? All right, so you found your buy side, you found your sell side. So now, before I focus on where the market is going, I'll look for order blocks, okay? So I know that this is our buy side liquidity right here, okay? This is where the market is going to aim to take out. Also, our sell side, the market is going to aim to take out as well. So what I'll do is, what is an order block? Okay, an order block is where passive orders are sitting, okay? To put that into simple terms for y'all. So I see one right here. It's probably smaller on the 5 minute. Okay, let's go down to the 5 minute and see what it looks like. It's actually bigger, okay? So, me personally, I would mark it on a 15 minute, okay? This is a 15-minute order block. Michael, what kind of order block is this? Okay, as you can see, there's a lot of room here, okay? So you have to bear it with your stop, but we'll get into that. All right. So what kind of order block is this? This would be a bearish order block. Why is that? Because it's the first up close candle before the down move. Again, what is a bearish order block? The first up close candle before the down move. All right. Now you're probably thinking, Michael, that's a lot to weather. I know it is. Okay. So now that I found where my entry is going to be, all right, for if the market reaches for buy side liquidity first, all right, now I'll look for my entry for sell side liquidity. This is an estimate, okay? So now we're looking for our bullish order block. All right, so let's see what we got. Let's go down to the 5 minute and see what we got, okay? So at the moment, okay, I do not see anything that stands out. All right. So, Michael, what do we do in this instance? So what I would do personally is I'll enter at this low right here. All right. I would enter there. Why is that? All right. So the reason why I enter here is because this is the lowest low after the sell side liquidity, or the closest low. Okay. So since there's a little gap here, all right, you have to wear this. You have to weather this. Okay. So now, after you found your order blocks, your bullish and bearish order blocks, all right, or a fair value gap or anything like that, if you guys want to know what a fair value gap is, it's just the imbalance in the market, okay? It's in between 3 candlesticks, the middle candlestick, nothing's there to fill it, okay? Simple terms. All right. So again, after you found your order block and you found everything, now you look for where price is likely to take out first, okay? So for me, it seems like price wants to take out buy side liquidity first, okay? So what is it going to do? Well, it has it done already. It came up into the order block, as you can see, okay? And it rejected. All right, it rejected. As you can see, we're kind of consolidating here. All right, it's probably going to come back up. So what do you do in this instance? So let's say, okay, that price was right here. Or let's say price was over here, okay? Price is just coming up. So what I'll do is I would put an order here, okay? My order will be right here at the 13,309.50 level, okay? I'll put a sell order. And then I'll put my stop on top of this order block, okay? At this high right here. Okay, I'll put it right here. This would be my stop. Now you have to keep in mind, you have to weather this, okay? It's probably going to come up further than that. Sometimes it will, and that's okay. Now, once I put my stop, or once I put my my order, this is very important, guys. Do not rush it, okay? Let price come to your setup, okay? Let price come to your setup. Don't try to take the order early, okay? Don't try to get in early. Don't do any of that. It's not going to benefit you at the end of the day, okay? Go with your gut. Go with what you know, all right? This is just me. I'm not a financial advisor. All right? So price comes into this. Now, once price fulfills my order, obviously I'll have my TP. So what I'll do is I will mark from where I entered, okay, to where I want to get out. All right. The middle part here will be called equilibrium. Okay, this is where I take my partials and I'll let my runners go. Now, again, do not rush it. This is a process, okay? This takes studying. This takes research, okay? So, after I found my equilibrium, again, once it reaches the middle here, I'll take partials and I'll let my runners go. Now, once you have to also figure out, okay, I'm trading 7 micros. 7 micros is $3.50 per tick, okay? So only risk what your account can weather, okay? Usually I only do like a 40 tick stop loss, okay? That's about $140 risk. You could risk more. That's up to you. I recommend sticking to like 5% or less. Some people do 10. I do 10 sometimes. All right. This is a phenomenon that happens every single day, okay? The market's going to take out buy side liquidity, for example, and then after that, it's going to come right back down and take out sell side. All right. It might not be as clean as I'm making it seem, okay? And vice versa. If price takes out sell side liquidity first, it's then going to find the order block or that fair value gap to reject off of, and then it's going to take out buy side. Again, it's not going to be clean. All right. That is simply what I look for, guys. And it's like that every single day, okay? When you have a strategy, you want to keep it simple. You don't want to overdo anything. You don't want to make things complex, okay? Always keep your strategy simple. Even if you learn the strategy from somebody else, keep it simple, guys. Keep it to where you understand it. There's a method to my madness and how I understand it, okay? There's a method to everyone's madness and how they understand it. Keep it simple. Also, guys, down below I have a link for Apex. If you click that link, you can get an Apex account where you have low risk, okay? And with that account, you can trade with, they'll give you funds to trade with, and you have leverage at that point, okay? Also, there's also a discount code down below. There's different size accounts. There's 25K accounts, okay? There's 50K accounts, 75K accounts, etc. Okay, and there's a daily trailing drawdown. Everything's explained once you click the link in the description and use the code that I have below. All right, and I'll give you a discount. All right, guys, I hope you have an amazing night, morning, evening, whatever it is for you. Have a blessed day. Hope you guys enjoyed this one. Again, you know, you can leave questions, comments, concerns, anything in the comments down below. All right, I'm willing to explain any questions that you guys have. All right, I'll catch you guys in the next one. Peace.